Oh, it's that time again, candle by candle analysis, one of my absolute favorite ways to learn more every single day from the markets. The idea behind candle by candle analysis is to go literally candle by candle by candle and hide all of the other ones. This way, we don't know what's coming, and we can backtest effectively any situation. Sure, you can go forward and cheat if you want, but that's not really going to do much for you. If you really want to utilize this as a way to learn, then we hide all of the other candles, we go back to candle 1, and we start from there. Hey there, John Henry here, SSFTG. Welcome to the video. Like I said, in this one, we're going to be going over candle by candle analysis, and basically, this is where we go through one of probably the best ways to learn and understand market psychology. Taking each one of these candles and dissecting them by volume and how they closed and how they opened, where they went, this is where you really start truly understanding why the market's doing what it's doing. Let's zoom in a little bit closer here, and first off, before we can do anything, when we kick off the day with a brand new candle, we have to know where is this coming from, right? What happened the day before? Where are we? And if we look backward a little ways here, we can see that there is, well, a relatively large bullish bounce off of the lows there, but that's after a large bearish drive. So we've got to take into consideration two things. First off, the bulls are definitely winning the short-term fight, but second of all, the bears are winning the long-term fight, right? They're going to continue winning the long-term fight until those swings are broken. So realistically, I still have to approach this with a slight bearish mentality because that's what the market's telling me to expect. And the fact that we're opening with a gap up, and if we look at where this gap actually opened, we have an outside gap up, meaning that it opened outside of yesterday's price action, and we tried going all the way in, and then closed back up. That's not exactly a very bearish signal, even though we should be looking bearish. It seems like we need more info. If the sellers are going to be coming in anywhere, realistically, if they're trying to get the best price, I suppose the best price given the current day would be above the high. There's nothing really else up there. Obviously, the big problem there is if you're selling, where's the stop go? You've got to go way, way back to some of those other major swings to figure it out. So a risk perspective, it's very wide open. There will probably be sellers there above the highs because they don't want to sell way down here. This candle is garbage. They'd rather try to get a better price. Okay, so we go into bar 2. We have basically an inside. I mean, the bodies did nothing. We have a very, very small actual open to close. And the rest of it's all wicks. They tried to break up. They tried to break down. We're not really getting anywhere. If we look at yesterday's high, we are still closing above that, and that seems to be the barrier. That looks to be what's causing all of the problems. Let's put a line on that so we don't lose sight of it. So effectively, we're going to have a hard time going short until we can start actually breaking through some of this structure. And the bulls are going to have a hard time getting anything going because, well, realistically, the POC's at the top, and all of the buyers would much rather wait for a settlement fill, a gap fill, a test of previous support, something that would be a better price, not way up here. So we wait. Sellers will be looking for continuation, but they don't have any reason to believe that this bear bar is going to be the one to do it. The last candle was a total flop, so if anything, they're just selling above the highs as expected. That's all we really have to work with. Well, that's all we did have to work with. Monster bear bar to the downside, almost completing the entire gap in one shot. What a crazy drive. Let's take the volume into consideration here and see what's going on. From a volume perspective, we can see that the POC is still stuck up at the highs and the market just obliterated all the way down. We have not filled the gap in, so the gap remains to be filled yet, but this is one heck of a bear bar. We do have some possible gapping from the close or the low of this candle to the close. There's some distance here, but we need another candle to confirm it. It's relatively early. Given the context of what was going on up here, this looks like a really strong bear bar, but where are the bears going to go anymore? I mean, they don't have much else to work with. They covered it all in one big candle. All the support's down here. This is where the buyers want to come in. If they do go a little bit further, the next zone of support would be that pocket of wicks right there at 44.85-ish. That's about it. Let's mark that one up just so we've got it. Otherwise, we're just kind of hanging out in limbo right now. Going on to the next bar. Okay, so they do finally dip down and get the settlement fill. This is going to be a location that's a bit tense. We've got buyers who, I mean, if they buy above this bull bar, they do have room to get a scalp, right? There's room to get a scalp inside of there. We'll give them that. But in terms of the overall context, I mean, what's their goal here? You know, I mean, the bears dominated it off the highs, slammed it to the downside. We filled settlement. After filling settlement, if we look at the overall volume, if anything has changed, nothing's changed. We can see a little bit more volume down here, but that's to be expected. People are taking profit around settlement. What a shock. So really, we have to ask ourselves, you know, this downside gapping, there's a few things that are still saying that the bears kind of control this. The bulls might take it, right? So if the bulls are going to take it, let's give them the benefit of the doubt and assume that they can maybe get up to a scalper's target. A scalper's target would be right here at the latest, and that would be where shorts are going to be looking to try to drive in if they can get it. Oh, that's just mean. So they don't actually get the bull's target. That's why I say it's mean, because if the buyers did try coming in off that gap fill, they got swerved. This is a really strong bear bar down. I know it's down at the bottom of the lows like we were just talking about, but because the bulls did not get their objective, sellers may be looking to come in here. Now, we do know that we're dealing with a range. So selling, like I said, way down here, I mean, we already know that's going to be a challenge. There's a ton of wick here, though, and that suggests that the market can kind of roam back here a little ways. It might be more beneficial to utilize this pocket of wicks as a zone of resistance to try to kick the market back down, and that will give us a little bit of defense to kind of give us wind in our sails. We do get a bull bar back up. Now, there's a couple things that are going on here. First off, we have the bottom pocket of wicks off of the gap fill, which is being supportive now, demonstrating potential bullishness. If the buyers are going to be coming up, they have the same problem they did over here. It's a worse entry price, and it's even closer to resistance. They're not going to be setting themselves up for a very easy fight here. Not to say that they can't win, but let's see if the volume maybe helps them out a little bit. Nope. Now, we do have some pretty thick volume now. It's not really making up its mind, and we can see that back and forth transition. But, I mean, all things considered here, all they managed to do was close the previous candle gap. The bulls have a stronger bull bar. It might be a bear trap, but it's a bull signal directly into resistance. The POC hasn't changed. Nothing is giving them the reason to be a bull. So, realistically, sellers are going to be looking to drive this back down using this resistance. If they can get that test, this is the same spot, and they would love to get a hit. Let's see here. Oh, geez. Okay. And swerved again. It didn't even move up. The bulls could not even manage to get triggered into the long, and the bears just swept this thing through the floor. Now, here's a little bit of a caveat, right? We knew this was support down here. We've got a big pocket of wicks. The next pocket of wicks is going to be down here. I wasn't necessarily expecting this big of a candle, but they closed through it. So, you know, a lot of things can change in another candle. Twin reversals happen. They could easily go right back. But the fact that they axed this zone is going to be a serious problem. There are going to be sellers who were trying to buy into this. They don't want to be sellers. They're buyers who are looking to get out now, right? They're like, whoa. No, wait a minute now. That was too much. We also have sellers who feel like they got swerved, right? We've got FOMO. A lot of sellers feel like they got missed, and whenever we've got FOMO, sell-side activity starts picking up. We don't necessarily know how far it's going to go, but a lot of times they will try to span out to some of these scalp targets as early as, let me get a price on this, 44.77, 44.73 quarter, or even 44.69. Wow, all they got was one of them, huh? Jeez, they got a little tiny breakdown. I thought they were going to go a little bit further. They got a slide down through, and, well, they did get a scalp target, and now we've got some problems here. We have another mixed bag. Sellers might have been suckered into the short here, and they're feeling not so happy. We do have a monster bear bar, so it's very unlikely this just does this, but it can happen. And that is going to be in the minds of a lot of traders. Let's see what this volume looks like while we pierce through the lows. Oh no, it doesn't do anything for it. 45.12 is still the POC. There's no change. And that suggests that if the bulls were up here for a breakout continuation, they got absolutely dumpstered. And if these are bears, they've been right ever since the beginning of the day. They haven't stopped being right. They're deep in the profit. So if those bears are so deep in the profit, let's see, where would their stop be? Do we have anything to work with? What are they giving us? The only stop would be way up here. Yikes. We are starting to get down to those targets, though. I mean, that scalper's target, we're right around that zone, but that's so far detached that it might just not be far. It might just be too far away. Looking at the current context, again, this is why you always give it 2 candles. In this case, we've got a little bit of a concern, some gapping up from close to open, possibly suggesting that we should be in for another move down. We've already axed through the zone of support. We might have a false rally. We do have a continuation up. Now, this one's important because if the bears were selling down here and they sold underneath the bear bar, they were not given a chance to get out of break even. We've all been there before, right? Sell underneath the bear bar, and then all of a sudden it's 7 million ticks against you. Like, what happened? Try to get out of break even? Nope, got missed there too. That's what's happening here. A lot of shorts know what's going on here. We have continuation gapping suggesting that this is exhaustion. We're not expecting this to stick around very long, and much more likely that the bears who got stuck down here are going to be looking for an out. If we measure out where their break-evens are going to be underneath that bear bar to, let's just say they sell the close of this bull bar, they'll probably be able to get better prices, but again, we've seen a lot of these other bull bar, bear bar transitions totally fail. They're not going to let it have a chance. Let's just say they sell the close to be safe here. That gives them a break-even point right there at 44.8775. I'll make this line a little bit thicker so it stands out, and that way we can look at that from a break-even perspective. If they are looking for a break even, that's going to be where they do it. They tried going short. They got absolutely annihilated. They couldn't get out at break even. Now they're grasping at straws. Signs of exhaustion. Now's the time to strike. Sellers will start selling in here for a continuation move back down to get out at break even. And we also know that longs are going to be trying to piece this move back up off of this support if they can get it to hold. Big bear bar right back down again, directly into support. We already know that this is a terrible spot to sell. The last time around is a miserable failure now. They filled in all of the gapping action, so there's nothing left to the downside for the sellers to achieve. We are back to a break-even point. If the market's going to bounce, this is going to be where it's going to bounce. These are those culmination points where you stack everything together. We've got the earlier bears looking to get out at break even with accumulated profits. We have bulls who are looking to reposition themselves back in because chances are if they were bulls from the start, they were buying into this anyway. Now that they've got a bounce, they can profit out with some scalps, drive their average down a little bit, buy more on the dip. That's what they're going to be looking to do. We have shorts and longs looking to do the exact same thing for different reasons in the same spot. Going into the next candle, geez, they didn't even trigger the bears in. Immediately responds with bullishness right back up again. We do have some zones of resistance, right? We've got some volume to consider, and we also have a pocket of wicks back here that we're going to have to deal with. Now, we have finally shifted the POC down, and the market is now closing above it. That's a pretty strong sign of bullishness, but we still have the sellers overarching this entire move. Remember what happened here. The sellers dominated it from the beginning of the day. They haven't stopped being right. So when we start correcting back up into a previously known zone of resistance, then they're probably going to start selling back in again. Likely, they've taken profit on the drive down. Time to rebuild the position to get that cycle going back down once again. We have a push back up into the pocket of wicks, the previous zone of resistance. And if you look at that high close, high open, if you want to know why I look at these so often, this is why. Very frequently you'll see this where they go to the tick over and over and over again. It's ridiculous. But we have another rejection back down. And the POC is not looking so healthy. Let's get that extra candle on there just to make sure that we have all the data. Go to this next one. And here we can see that we are in fact closing back below the POC. So we have to ask ourselves, right? The bulls had a horrible launch to go to the upside. The bears, we know, have gotten out of break even down here, and if there are any bears left with the POC shifting down, it's likely they've done some work regardless. The bulls are going to be looking for a continuation back up if they're able to, and now that we have a relatively defined stop, they've got something to work with. We know that we've got plenty of support here now. We also know that if the bears didn't get out at break even before, they're much more likely to now, and we still have a possibility of the swing low acting as an anchor point for the swings on the upside back to the highs. If they're looking, let's say, just back up to the support zone, right? Back up to the support zone for targets into those 2-to-1s, not wanting to fight over this, and I can't say that I would blame them. That means that we should expect buyers to start coming in at around 83.50s or so. Let's see where the bottom range of that is for the 3-to-1s. Same scenario. And that will give them to about 44.81. That's going to be the hot pocket. If the bulls can find support, this is going to be the money. This is where they really, really have everything stacking in their favor. We've got the bear bar. We know selling in the middle of a range is going to be challenging, and it's probably not going to be easy for these guys either. Sure enough, it's an absolute train wreck. It did try going back up towards the range. The sellers, as per the usual in a range, off the range highs in resistance. They sold it again, rejected all the way back down, closing back underneath the POC. We've got a bull bar back up, trying to get above the POC. More wick failing to close above the POC. They did test the break even. There's the break even again. So like we were talking about, if they're going to be given a chance to get out at break even and you're looking to scalp these psychological zones of interest, these can be really, really nice. I know my luck, though, it wouldn't have been filled there. Let's see if they want to get this bouncing back up and breaking through this resistance, popping back above the 45.07s, maybe even back up to that original POC. Or not, or we just go back down again. Now remember, we know that we've got a metric truck ton of support down here. I wasn't expecting a bear engulfing candle, but hey, here we are. Down at these low closes, that stacks up really nicely. We've got the zone of support for the 2-to-1, 3-to-1s. We've got previous wick structural support. We have literally everything stacking up for the bulls, and this is also the bears break even. So, I mean, we can't ask for much better. Ooh, now, okay. Oh, I know I wouldn't have been filled. Every time the S&P hits me to the tick, I don't get a fill. I know how this works. Chances are I wouldn't have gotten filled. Absolutely phenomenal bounce off of that. Ludicrous. Now, there is a little bit of a caveat here. If you didn't get filled, and the reason I say that is because I know I probably didn't, we're back above that break-even point. I know it's not by much, but we are closing back above the break-even point. And from an algo's perspective, they are ones and zeros. That's how they operate. It was in the profit. Did it close underneath my entry point? Check mark. Yes. Hey, the next 5-minute bar is done. Did it close above my entry point? Oh, now it's in the negative. Axe the trade. Try to get out at break even. It may not look like much, but given the bounce of support, the reconfirmed support, and the 7 trillion other reasons we talked about down here, buyers will be looking to reposition, but we might have to just settle with that break even point. Yup, and there it goes. It doesn't even pull back down into the lows before it takes off. This is sometimes what you have to deal with more liquid markets that are harder to get fills on. You get bounces to the tick, and you have to sometimes just accept the fact and meet it in the middle. We have continuation to the upside. That's not to say that at some point today it might not pull back. It might even do it on the very next candle. We've seen a lot of those juking this thing all over the place, but this is great context to the upside. We're closing above the last POC, but let's see if it's changed. It has not changed. The market is closing above the POC. It has everything it needs to start hitting the gas pedal and start going. And there's liftoff. Let's finish this thing off as we go into the 11 o'clock hour. Beautiful continuation break. They couldn't quite make it up to the highs. The buyers are going to be looking for follow-through. I know I said let's finish it off, but I'm curious. Let's see if the bulls can get another deeper pullback. They want their stops under the low, but their targets are a little bit further up. Can they slide to a deeper pullback down here? That would be back down here. That would also allow the earlier shorts out at break even. That might not happen. Talking from the vindictive state of mind. Let's see if they can also do this one with a stop underneath this low, just to play it on both sides. If they really want to give the value, the earlier shorts giving another chance to get out at break even would be right there. That's back at the support zone. That's the massive zone of interest here. If they're going to be greedy and play more along the lines of the POC, then it's going to be a bit further up. What is that? All right, cool. No, that's fine. They're just going to hit the POC by one tick and go screaming back up again. Absolutely insane. Let's see how they want to follow this through. They did end up getting a new high, and then we go to the end of the day where it is now. So that's candle by candle analysis. It's an incredible way to practice and learn the underlying. Why is the market doing what it's doing? Put yourself in the shoes of the traders. If you were a buyer there, are you underwater? If you're underwater, where are you looking to get out? Where's your stop? If you're looking to average in, where's your break even? If you're short and you're in the profit, where are your targets? These are all things that you can learn simply by going candle to candle. So that's going to do it for this one. If you have any questions, comments, or anything else, drop them in the comments section below. I always love hearing from you all. Along with that, if you're looking for a way to hang out with me and the rest of the VIPs during the New York Stock Exchange Open from 9 o'clock until 11:30, 12 o'clock, lunchtime basically, make sure to swing over to SSFTG and register for a 1-week trial. This gets you in the live trade room with me and the rest of the VIPs for an entire week so you can see how we approach the markets while they're actually moving in real time. Along with that, you also get our 24-page guide on risk reward, and you get the ability to register for a 30-minute call with me to answer any questions that you have so we can get those taken care of too. Thanks for watching, and until the next one, we'll see you all then. Bye.